The American Train Dispatchers Association said that over 99% of voters have approved a railroad strike because of their frustration in waiting over 3 years without a raise and the railroad's refusal to bargain in good faith, especially in light of their astronomical profits. They are preparing for something big. A railroad workers union strike would be a devastating blow to our supply chain. And I predict a jump in even more inflation, possibly hyperinflation, if they were to shut down the trains on the tracks. This would totally wipe us out. The railroad union is complaining that they want to shift huge healthcare costs onto the employees and with providing inadequate general wage increases that would be insufficient to combat the high inflation period that has caused financial hardship on each of their members. But I'm not sure if the Railroad Workers Union is aware just how bad inflation would be if they actually went through with the strike or with their strike threat. However, the union representing train dispatchers has authorized a strike in the event a new labor agreement is not reached under provisions of the Railroad Labor Act. Granted, the Presidential Emergency Board is currently handling the contract dispute in hopes of avoiding one of the worst things that we could see happen this fall that would have a meaningful effect on Americans all across the country. The Presidential Emergency Board, which heard presentations from each side as part of a week of hearings last month, is due to present its recommendations on or before August 15th. So, August 15th is just 5 days away, and August 15th will trigger a 30-day cooling off period for the sides to reach an agreement. After the 15th, we will have a 30-day countdown before the potential strike, which basically means that if there's no agreement, if they can't come to an agreement is not reached by the end of that 30-day period, the ATDA, along with the other rail unions, are free to exercise self help, or railroads could impose a lockout. The ATDA, or the American Train Dispatchers Association, is one of the 12 members of United Rail Unions, representing 115,000 rail employees in the negotiations. And the Brotherhood of Locomotive Engineers and Trainmen had previously announced their vote in favor of a strike already. Senate Minority Leader Mitch McConnell is going to eat his words and see that Americans aren't lazy and they aren't flush with cash and just don't want to work. Not because they have all this stimulus check money lacing their bank accounts with checkings and savings balances overflowing with wealth, but because they are tired of working for scraps, barely being able to get by, and their employees or their employers laughing all the way to the bank as they boast record profits and more ways to cut back on their employees. But we are seeing some changes to minimum wage and the regulations for tipped workers in some parts of the country. Not only were some tipped workers only earning a ridiculous $2.83 per hour, they also had to pay for credit card fees out of their already tiny earnings. Hopefully, a new minimum wage regulation that went into effect in some parts of the country will help these struggling servers and add more money to the that is rightfully theirs already in their pocket. This new legislation has been put into place to help protect tipped workers, and the biggest takeaway will be preventing an employer from deducting credit card fees from employee tips. For example, if someone were to leave a $5 tip on their credit card and it costs 20 cents to process the tip, the employee is no longer responsible for that 20 cents fee. The employer will now have to absorb that cost, giving the employee the full $5 tip they earned instead of $4.80. While this is good news for tipped workers, it's not necessarily good news for the employers, with one restaurant owner stating that roughly 90% of his sales are credit cards. So with customers tipping on credit cards, that number at 2.4 to 3% is a lot of money. Now, he also said that prior to the pandemic, it wasn't that much of a problem, but now that they're getting crushed on pretty much every section, it's becoming an issue. So basically, these costs are adding up and they have to be paid by someone. And the only people who can pay it would be the owners or of the businesses, the employees, and or the customers. So, in my opinion, I would expect to see higher prices and more inflation in cities and states that adopt these new changes for protected tipped workers. The easy solution and workaround to this would be to pay in cash, but not everyone carries cash. And actually, I have a funny story about cash. I went to the ATM yesterday to withdraw some cash, as I typically do as part of my stockpile cash stuffing prep, and noticed something very interesting coming out of the ATM. And I'm gonna show it to you guys so you can see here what I saw coming out of the ATM, which was comical, but a little bit interesting as far as what's going on with our money. This, if you guys can see, is an old $20 bill. I did not expect to see this coming out of the ATM, but this has got me thinking. It's got me thinking. I want to know what you guys think, but it's got me thinking. And I'm thinking more and more people are out there getting their cash now while they still can before it's too late. Therefore, the bills that are available, we're starting to see some of the older bills coming out. Just a guess, just my opinion, may not be true, could just be a fluke. But let me know if you guys have experienced this here recently, or if you know anybody who's holding on to some of these older bills. But there are some more changes that, besides the 20, there's some more changes that are included for these tipped employees. They now must make $135 in monthly tips before an employer can reduce their salary to the $2.83 an hour. Also, tip pooling is allowed, but now the managers and owners are excluded from having any portion of that. Lawmakers in support of the new regulations believe this will definitely help working families. But my question is, who will monitor and actually enforce these new rules? Some supporters of these new protected tip workers changes have said that it's not fair nor smart business for credit card processing fees to be passed along to the employees. Employers should want their employees to make as much money as possible. That would reflect good service, retention of employees, and suggest a healthy work environment. While business owners managing their books and accounting responded with, we do want to keep our employees and we work hard and are paying extra to keep our employees, but profit margins are shrinking, so it's just getting tough. Now, although this is just a small step forward, they hope to raise what some are calling a poverty level minimum wage of $2.83 to $12 an hour. And speaking of money, higher income means higher taxes. And with taxes comes visits from our good friends from the IRS. And the IRS is adding 87,000 new agents, and they are preparing to audit more people than ever before. As the Democrats' spending plan moves closer to a House vote, one of the more controversial provisions, nearly $80 billion in IRS funding with $45.6 billion for enforcement, has raised questions about who the agency may target for audits. Now, the IRS Commissioner, Charles Rettig, said these resources are absolutely not about increasing audit scrutiny on small businesses or middle income Americans. However, with the investment projected to bring in an additional $203.7 billion in revenue over the next few years, which opponents say IRS enforcement may target and affect everyday Americans in order to bring in that money, more than likely to support their gross and reckless spending habits. Currently, the IRS uses software to rank each tax return with a numeric score. With higher scores, more likely to trigger an audit. The system may flag a return when deductions or credits compared to income fall outside of acceptable ranges. For example, let's say you make 150 grand and claim a $50,000 charitable donation. You're more likely to get audited because it's disproportionate to what the system expects. And experts say that other red flags for an IRS audit may include unreported income, refundable tax credits such as the EITC, home office and auto deductions, and rounded numbers on your return. While the legislation still must be approved by the House and signed into law, it will take time to phase in the funding, hire and train new workers. But can you imagine the joy of getting audited by a newly hired rookie IRS accountant? Honestly, I think I would rather have my fingernails ripped out with pliers instead. But according to the Treasury Department, the IRS is aiming to hire about 87,000 new agents. And these new agents are going to have to get to work. They're going to have to prove themselves in order to maintain employment, and they're going to have quotas to reach. And ultimately, there's no way that they can do this and not increase the amount of audits and or the revenues produced by each audit without, successfully this program having its success and the return. If not, they're just adding more employees for what reason, and ultimately further adding to the gross and reckless spending and misuse of the taxpayers' money to hire these employees that basically are just going to sit around and do nothing.